Dan Ives has set the record straight yet again on Palantir, telling the bears and the naysayers exactly how he feels about Palantir. Don't worry about subscribing, smashing the like button, or looking for the coaching and Discord link. We're going to get right into Dan Ives and what he said about Palantir and the overall tech market. But first, if you guys don't know already, today, in just a few short hours, my free masterclass webinar, 8 p.m. Eastern Time, 5 p.m. Pacific, today, January 17th. Link is in the information box below. You need to sign up and register right now. Very limited spots remain. I have a huge announcement, and I'll be taking a Q&A from you guys and hanging out with you, teaching you how to become a better and more profitable trader. Every student that's ever signed up for my webinar said they learned more in the 1 hour with me than they did anywhere else. I will see you guys there. Register now. Let's take a listen to what Dan Ives had to say.
So Dan, let's just start here. The yield pressure, 20-year hitting over 5%, but I think the real thing that we're looking at right now is the 10-year at about 4.75%, putting a lot of pressure on tech on top of a rising dollar. How do tech stocks move higher with this setup?
Yeah, I think there's two things playing out. I mean, one, fundamentally, in terms of AI, CapEx, use cases, what we're seeing strong on the enterprise was on the consumer side, that's actually better than expected. And I think we'll see that over the next month in terms of earnings. Now, clearly, look, we've gone through this the last few years. In terms of the 10-year bond risk off, we're going to have these moments. But our view is these are the opportunities to own the winners. And as the fundamental cases play through, look, Frank, I only think we're halfway through this tech bull market.
All right, we're only halfway through. I do want to talk to you about Palantir. That's one of your top 10 picks. Under pressure once again. We've seen, after it was the best performing stock in the S&P last year, we continue to see a sell-off and the stock be under pressure. Are you concerned about the valuation like so many other people say they are? They just believe the valuation is too high, and it would be very difficult for the company to live up to the lofty valuation.
Yeah, I think if you just stick with valuation, you've missed every transformational tech name in the last 20 years. I think Palantir, I continue to view as that's the next Oracle, the next Salesforce. When I look at AI revolution, and look, let's talk about numbers. $2 trillion of AI CapEx next 3 years. And I think where Carp and Palantir position, as it plays out, we're going to have these sort of white knuckle periods. But ultimately, I think this could be a 3-digit stock as it plays out. But these are the times that you ultimately look at the winners and how to own them.
All right. So you and I have talked about this before, the rise in the dollar. I'm looking at a 1-week chart of the dollar. It's up about 1.5%. These are tremendous moves when it comes to a currency. We did get a spike after the jobs report, but still, it was still moving higher last week overall. I know you're bullish on tech. You're always bullish, just to be fair. You gave us your top 10. Out of these top 10, which do you see as being the most likely to be impacted by this rise in the dollar due to their revenues coming from overseas?
Sure, Microsoft, Oracle, probably 1 and 2 in terms of ones that are exposed. I mean, Apple clearly will also have some headwind. Now, look, I think the street is already factoring in some of that in terms of estimates. I don't think this becomes that dramatic if, ultimately, if we actually start to see this curtail. But it just comes down to, Frank, I think we sit here a month from now. It's a much different picture because of the fundamental picture right now that plays out in tech, as this actually is seeing strength being led by the AI revolution.
Okay. But we have seen a lot of weakness in tech, Dan. Let's just be fair. We were just showing a chart from Mike Santoli's column over the weekend, showing the current bull market and the average bull market. If you look at the average bull market, this bull market has a lot more to go, but it seems like tech, it doesn't seem like it, just due to the concentration, tech has to be the engine moving it forward. So if we go to the next Fed meeting coming up later this month and the Fed continues to be hawkish, do you see that continuing to impact the tech trade? Because that seems to be the inflection point, even for the tech trade, even though we call these stocks defensive just because of their bulletproof cash holdings and everything else.
Yeah, and look, and that's also why you have a diversified view in terms of whether it's an Oracle, whether it's Microsoft, and some of the more high growth names like a Palantir, Tesla, and others. Look, it's going to be a headwind, but our playbook the last few years has been you use these opportunities to own the winners. And that's why I get the bears are going to come out. Right now, the bond market, the 10-year is going to ultimately dominate, but we're only halfway through tech bull market. And that's why I still believe tech stocks are up 25% this year. We look back at this as an opportunity, not time to hit the elevator and ultimately hit the exit.
So it's not just about fundamentals, it's also about sentiment. Sentiment's a big driver in the market. Which one of these earnings reports do you think we need to watch to look at sentiment? Which one's going to tell us really where the tech trade is as far as the investor sense of their confidence in the bull market going forward, their confidence in this AI trade?
Yeah, I think Microsoft, because I think as long with NVIDIA. Those are probably the best in terms of barometers for what we're seeing with AI, and ultimately that's the stock that's also been under pressure. And then ultimately you look at Apple, because Apple right now, whether it's Zuck, whether it's some of the downgrades, a lot of pressure in terms of showing what we're going to see specifically coming out of China in terms of demand.
So you heard what Dan Ives had to say. I'm going to break it down for you little by little so you guys understand exactly what's going on in the market right now. Dan Ives said many times, and including this time in his most recent interview, that he believes that the AI tech market is a 4 a.m. party and we're just getting started and it's only 10 or 11 o'clock at night. So we have a long way to go. And this is really fundamentally strong because even though we have some headwinds right now, it's short to midterm, not long term. Dan Ives sent a very strong message to the naysayers and the bears saying, and I quote, "If you base your price targets and value on Palantir based on just current valuation, then you pretty much have missed out on all of the transformational tech stocks over the past 20 years. This is a very clear message because just valuation in the short to near term doesn't really compute to a value on a stock going forward in the mid to long term, especially with median forward-looking PE ratios, price to sales, and the rapid, forever expanding and exponential growth of tech stocks and AI stocks, software like Oracle, Salesforce, Snowflake, you have Palantir. These stocks have grown rapidly. Palantir, he says, is on par to be the next Oracle or Salesforce. And he also goes on to say that the AI capex is $2 trillion. So there's a lot of growth ahead of us. He also explains that 1 month from now, it's going to be a completely different situation and that the 10-year bonds are headwinds for the AI and tech stock market sectors and that it's going to continue on for a little while in the short term. But Microsoft earnings and NVIDIA earnings are a barometer for the AI tech and the software tech and AI capex space, and that we have to really look to see how Microsoft does on their next earnings, as well as NVIDIA, more specifically Microsoft, due to the US dollar going up and the fact that they receive a lot of orders and a lot of revenue from foreign currency. Then we've also got to discuss something he brought up, which is the hawkish Fed and the fact that we have another Fed meeting at the end of January and we're unlikely to get interest rate cuts then. However, if we do, the stock market will fly, especially with earnings season coming up in February and March, and the inauguration at that time will have been behind us. And if everything goes well with inauguration, there's no issues, no worry about tariffs, nothing gets brought up or said wrong because the stock market loves to overreact, there will be no issues with the stock market flying if that happens and earnings season starts to take off well with Microsoft and we get interest rate cut. Now, if we don't get interest rate cuts, but everything else goes according to plan and earnings are good, the market will continue to creep up and things will look pretty strong. We also have PMI data coming out for services and manufacturing in the first week of February. That is critical, smack dab in the middle of all of this earnings season. Dan Ives also predicts a 25% minimum growth in the year 2025 for the tech sector in general. I think it's a little bit on the conservative side, depending on the stock. I think AMD is going to see more of a 50 to 60% upside. I think NVIDIA realistically is probably looking at somewhere in the 20 to 25% range because they already have such a huge market share, but it's really also going to depend on their sales of the new RTX 5090 and the 5080. I've got a 4090 in this computer and a 4080 in that computer beside me, and I'm really going to be snagging that 5090 and the 5080 for these two machines. So we're going to see how good those GPUs are. If they sell a lot of them, that's only going to be adding confluence and adding revenue to NVIDIA, and that's a good thing. And I think that'll really help out, especially if these new video cards are absolute hits. But remember, like I said, they already hold a huge market share already. But remember, like I said, they already hold a huge market share. So it's going to take a lot for NVIDIA to move upwards. One thing Dan Ives said about Palantir is that he has a price target in the triple digits, which he has said before. Triple digits meaning that it's going to be over $100. Dan Ives has talked about $150 and $175 price target in the past. Tom Lee and other analysts have already spoke about Palantir with price targets of 125, 150, even 175. And some have even spoke of such numbers of $200 in the next 3 to 5 years. In the year 2025, we could see Palantir upwards of $120 to $150. I think that is likely as we go through summer and into fall, especially if earnings are good and things keep growing and keep going the way they are. It's also going to be dependent on the 10-year bonds, but not only that, if we get at least 1 or 2 interest rate cuts. If the Feds cut interest rates at least 2 times in 2025, we get a cut, let's say in March, and then we get another cut maybe by June timeframe, then we will be good. This will be really good if we can have 2 rate cuts before summer. Palantir could make its way to 120 plus by the end of the year, and how the overall market is playing out. With all these things considered, inflation as well as PMI data, the interest rate cuts, Palantir's actual contracts, their earnings, their growth, if everything lines up, then Palantir very well could be $120 in the next 10 months to a year. It's possible. Anything's possible. It's likely, though, that Palantir will reach $90 to $100 by summer or the end of the year. That is a very likelihood, real world possibility, because on the charts right now in the pre-market, Palantir's already back up over $70 again. Granted, we don't know how long that's going to hold, but it is definitely a stock that can pull it off. Dan Ives has explained, and like I've told you guys before, this is a buying opportunity. We use these sell-offs, these instances of fear and fear-mongering, bad news, and pullbacks to get into winning stocks at a much better price. However, before I show you guys how to get into Palantir, if you're struggling in the market, maybe you're looking to retire early, maybe you're just getting started, or maybe you're losing money and don't know where to begin, I would love to help you. It's what drives me every single day to help others just like you achieve financial freedom. All you have to do is sign up at investwithcorey.com. The link's in the information box below. I offer a full training course and a Discord with members just like yourself, so you can surround yourself with like-minded people trying to grow and learn just like you. And I offer full one-on-one coaching. So if you guys want to take control of your financial freedom, you can sign up at investwithcorey.com. And if you don't believe me, let's take a listen to what my student Shane had to say.
When I first started off with options, I knew nothing at all. Corey's program broke it down into very simple steps. Corey broke them down where it was nice and simple, and I was like, oh, okay, I totally understand that now.
How much are you up since the start of joining my program?
Oh, you know what? Hold on. I'll give you the exact number. Let me bring it up. On average, I was making about $2,200 a month day trading. That was average. In the very first month that I started actually selling options, it jumped up to $14K. And right now in December, I'm already up $6.4 thousand.
You went from day trading to my course, and you were able to go from 2,200 to 14K.
Correct. And I'm up 165% right now.
If someone was trying to decide between my program or another Discord, what would your direct and short message to them be?
Corey's program will save you time and make you money. That's the bottom line right there.
What would you tell someone who is skeptical about learning from someone online like myself?
I bought into multiple different programs. From my experience, Corey's is the safest, very consistent and profitable.
How long did it take you to actually make back the cost of joining the Discord?
From the time I started trading, I made my money back in 2 weeks, 10 days. If you want to count the actual trading days, 10 days. And then I just looked at it and I was like, holy cow. I'm like, I just made $14,000 this month. I'm like, that's like crazy. You know, just 1 month, it blew away, you know, almost my entire year of day trading.
What did you start off with in my program? Total capital portfolio. And what are you at now with profits?
Started off with roughly 50,000. I had 25-ish already like in stocks. And now I'm up to 75,000.
So you heard what my student Shane had to say, and he has grown his portfolio even further since this testimonial. If you guys want this to be your success story, act now. Go to investwithcorey.com, click on training, watch this video as it will answer all of your questions. Then you'll be able to book a call with my team and I so that I can help you achieve the same success. And I look forward to helping you when you are ready to grow your portfolio. So looking at Palantir, there is a lot of strong support right here at the $62 range. And again, more support here at the $68 range. And this is going to have a lot of support at 70 as well. If Palantir breaks back above 70, it's likely that it's going to stay above for the most part of the year, as long as earnings and news catalysts are good and not bad, or as long as nothing crazy happens in the stock market. The 10-day has just crossed over the 20-day, and they're approaching the 100-day moving average, but they're rejecting it right now. If the stock crosses over the 100-day and then pulls back and bounces on it, that's where we've got our confirmation that Palantir is going to stay above $70. So if the stock does this and goes above $70, then we know that it's going to be very strong, and I will go out 2 weeks and I will be selling $65 puts because it's a lot of premium. So we'll click here, click on put, click on sell put. I'm going to go out 2 weeks right here. And you can see if we go to 65, this is going to be $126 for one put. And the delta's 26, slightly aggressive. I might go a little bit safer to 64 or maybe even 63. It's up to you, but 65 or 64 is good. 63 is even safer. And 62 is really incredibly safe because it's a delta of 14. Personally, I'm okay with getting in anywhere between 60 and 65. Depends on the premium you want to collect, because if you collect $126 right here, your average cost is actually $63.74, which is good. Do the $64 put, your average cost is going to be around $63.10 or $63.13. So that is really good. You could sell the 65 or the 64 to collect that juicy premium. And if we go ahead and we sell 10 of these contracts, we'll be able to collect a nice fat $1,200 for just 2 weeks. It's $2,500 a month selling these puts on Palantir. Granted, this is going to be $63,000 worth of capital. If you're selling cash secured puts, if you're selling naked puts, it's going to be about $12,000 to $14,000, which is an incredible return on your capital that you're putting up. But then again, you only sell puts on stocks that you intend to own. So if you don't intend to own Palantir, then you don't want to be selling puts on Palantir. It's a great stock, and I want Palantir, and you'll do well with Palantir most likely if you're owning the stock now and holding it long term. If you want the stock, then you sell puts at the strike prices that you intend to buy the stock, and I would love to own more Palantir shares at 65, 64, 63, 62, even 60. I would love to own the stock at any of these strike prices, so I will start selling puts. I have some $65 puts in my large portfolio, and I have some 63s and some 62s going out 2 to 3 weeks. And this is what you can do to diversify your position in Palantir to get shares and to collect juicy premium, because if you don't get assigned, the cash is yours. The juicy premium is yours to keep. If you get assigned, then you get to buy Palantir at 65, 64, 63. If you have some at 62 or 61 or even 60, then you'll get assigned at these different strike prices. You will be able to dollar cost average. But if you get assigned at 65 and none of your other puts get assigned, well, then all of that premium is yours, and you only have to buy the stock at the strike price that the stock has fallen below, which is why I like doing this. I'll sell 10 65s, maybe 5 62s, and 5 60s, giving me a nice average price of 62 to 63. And this is how you dollar cost average through the method of selling put options. Palantir is a great investment. We all know this. Dan Ives knows this. But sometimes you guys get a little worried because the stock will slide when the market slides. There's a lot of headwinds going on right now. A lot. But that is not for you to worry about, because it's a long-term hold and a good stock. We very well could see Palantir break $100 by spring or early summer. And if that's the case, you have a chance to sell puts and get in now in the $60 and $70 range, giving you a 30 or 40% upside plus covered call and put premium in between. This is a really great opportunity to make money and to have a really great stock long term. Don't forget, guys, my free masterclass webinar is today in just a few hours, 8 p.m. Eastern Time, 5 p.m. Pacific. You don't want to miss it. Link is in the information box below. Very limited spots remain. If you guys don't register right now, you could miss the opportunity to attend the webinar. All of the students that have attended this webinar have told me they've learned more in the 1 hour with me than anywhere else, so you guys don't want to miss it. I have a huge announcement, and I'll be answering all of your questions. If you guys want to sign up for the Discord, training course, and coaching, that link is below investorcorey.com. I look forward to seeing you at the webinar and in the Discord at some point in the near future. Take care of yourselves, and I'll see you on the next video.